Today we are talking through a rejection setup on today's Watch and Learn, where I talk about what I see, how I would approach the market, what trades I almost took, and the patterns that are really needed to be recognized and to be able to make proper entry and exits, either that scalping or whatever way that you trade. All of it is going to be valuable. So let's first start with what exactly we're looking at. What I'm particularly going to discuss is this right here. Now, this is a really strong rejection, which to me is signaled by a very long wick and a very at the reversal. So because it is a uptrend candle, the reversal is whatever is underneath it. So this is 597, 599. So it's about $3 of movement. A little bit over, actually, a little bit over $3, about $3.30 of movement in just the wick, which is insane. So that's why I say that this is a very strong rejection. And what we're looking for specifically is we're looking at this key level. Now, you say, what's a key level? A key level is a key spot where price really matters. So the reason why this is called a key level is because of what happened a few days prior, excuse me. So this is Friday, the 14th, and we go back all the way to, well, this is Monday. So this is the day before Monday, so 6 days. And we see price came to the exact same point. Now this is considered a key level. Now you can write your key levels at the wick, like you can write them at the bottom of the wick, kind of encapsulating both wicks. You can draw it at the base of your bodies of the candle, all right? But it translates either way. Okay, so everything is not going to be completely symmetrical, but it's definitely not subjective. Okay, this is clearly a point where price wants to be. All right, clearly. Now, what's going to happen is that at these zones, whatever happened prior is likely to happen again. So we're going to watch this setup of this rejection. And it's technically not a rejection because a rejection is for a resistance and a support is for a bounce, and a bounce is for a support. So technically here we're talking about a bounce. I said a rejection. It's still a rejection. It's rejecting a zone, but technically, to use appropriate phrasing, it would be considered a bounce. So we're bouncing at the same level. And so and the other thing is that if I use the word rejection interchangeably with bounce, then you won't know if I'm talking about a support or talking about a resistance. So it's important that I use the word bounce so that you know, hey, look for the support that she's referring to. So here it is. Like I said a few days ago, it was here at the same zone. So when we saw this black candle form during all the way down and stop, particularly at 8 a.m., that's when you know that the next candle is probably going to be insane. And that's exactly what it did. It consolidated a bit, right? So we look at the lower time frame. This is 15 minute. This is 1 hour. We look at the 15 minute. And what do we see? A whole bunch of family candles that are just doing a little setup to consolidate in a continuation pattern. Okay. I mean, in a reversal pattern. Sorry. So even here, if you want to get a session down below that teaches about how to read a chart, you can do that. And one of the things I will discuss is specifically reversals versus continuations, because if you were able to look at this in pre-market and pay attention to it, not only know what it is, but pay attention to it, you would say, okay, what's happening here? That looks like a reversal. I'm definitely not going to enter to this side simply because of this really strong downtrend, right? And I'm circling on the 1 hour side, by the way. So that downtrend here is really strong. These are really big candles, but the pattern itself with the candles are telling us, hey, we're about to really push up. And so it's important that you're not only watching for these like liquidity zones, like at some point, price is absolutely going to dig into this when it's ready. Oops. Price is absolutely going to dig into this when it's ready. And I'm marking that by this red zone that I just put here. But the reason why it's going to dig into that is because now it's creating some liquidity zone where price is really going to want to go to at some point. And so I can imagine that between now and a few days, maybe a week, maybe a month, we might see some action here, which is $8 from our previous bounce. Or even here. I mean, that's going to be amazing. Now, if it doesn't, that's fine. But when we start to see it poke into this zone, at least we know, hey, if it starts to poke underneath, I would say here, well, we might want to capture the rest of that. That is $3, and it's probably going to keep going. That's $3 for the gap. Another $2 to get to this point, and another $10. So that's a really nice scalp. But you would have to, of course, take into account all the previous crowding. So you'd have to take into account and study this, and taking account and study this, and basically everything under where price currently is. And so that's why being able to know this zone is very important, because when it comes back to this zone, or I guess technically not when it comes back, but when market opens for the next day, well, what's going to happen? And we can actually see it a little bit right now. Let's mirror it on NQ and see what's been going on. So this is the, let's change this to the 1 hour just to get a little bit more precise, right? So we're looking at that, and we're looking at that same thing here, right? So price ended on about here, and this is also delayed, but price ended about here. So it's basically, from what we can mirror, we see that price is continuing to go lower. So sometime this week, it's probably going to poke into that zone, but do we know if it's actually going to fully poke? No, we don't. So the most important thing here is to understand that reactions at certain levels are going to create a story for the whole session. And so you can say, oh, in pre-market, it went really, really strong to the downside. That's the story. Okay, cool. Let me enter for puts and just kick my feet up. But that's not technically how it works. You want to make sure that you're also using your other confirmations, like your reversals, continuations, anything of your market structure. And again, like these things that you use to read the market go in different combinations. And a lot of people say, oh, psychology is how you become a good trader. I believe they say like psychology is 80%, trading is 80% psychology, 20% trading. I say it's 90% reading a chart. And then the other percentages go to risk management. They go to account recovery, which I talk about in the book. Someone commented, what book are you referring to? It's an unreleased book, but I just can't help but talk about it. It's amazing. So it goes into like account recovery is part of that percentage, right? And so I think that reading the markets is so important, and what we get ourselves wrapped up in as, a beginner trader would get themselves wrapped up in fighting against themselves, fighting against their humanity and their humanhood and try to be perfect. You're going to drive yourself insane trying to beat psychology, because you're a human with a brain. And no matter if it's trading, if it's another business, a relationship, a job, life in general, there are a billion things that you want to do right that you can never do right consistently, because you're not meant to do those things, because you're not a computer, you're not a robot. So if you try to think that you're going to become profitable by being perfect, it doesn't exist. You can become profitable without having perfect psychology. And that's what the book really gets across. And that's what is so important. It also talks about those other percentages of like, it's 90% reading a chart, I'm being honest. But and it gets you out the habit of blaming psychology, because psychology is not the problem. You can't undo psychology, and you don't need perfect psychology to be a profitable trader. But the book talks about like risk management, account recovery, and all the other fundamentals that you need to know if you want to actually do this and use your Wi-Fi to create your safety net. So let's now talk about why this trade shouldn't have been taken, as far as puts. First, when it comes down to this line, this 599, and you can see like each line matches up with a box on the right side. So you can see exactly what number it is. 599, the line for 599. I'm going to remove some of these circles just so we can see a little bit better. But when you look at that 599, it looks like price is going to fall right back into the same zone, and maybe even fall here, because that's what it did previously, right? Ooh. Price previously came all the way down here. So even if it didn't completely fall for the rest of the day, you could say, okay, I'm going to take it to this level. Still would have got stopped out. Why? Because it's just not going to do that. Okay? It's just not going to do that. So it's very important to wait and observe. And patience is going to pay you more than anything ever could in trading. Okay? So losses can really come from these strong rejections as well, because you have to think about the magnitude, right? So if you think about even just in life, there's some things that have really big consequences and some things that have tiny consequences, right? Skipping the gym one day, to you and your brain, it's a tiny consequence. Skipping it for a week, that's a bigger consequence, right? Because there's more on the line if you skip that much time in the gym. You risk eating bad the whole time because you're not working out, so you're not thinking about your diet. Those two things are really tied together. You're not thinking about drinking proper amounts of water. You're not thinking about exercise. You're not thinking about all these other things, right? Same thing happens in trading. When you look at a really tiny rejection, or I should say a bounce like this is a morning star, I believe. So when you look at this candle pattern, you're going to say, okay, this is a really strong bounce, right? But what we don't actually see is that it was only, like, this was in market. This was definitely in market. But it was $2. Okay. So the price difference on the price movement from here to here changed nothing on a larger time frame. Okay, let's literally go look. Like, go look. This is November 11 a.m. This is the 1 hour. And as you can see, this candle drowned out, because it's technically this one. The candle drowned out all of that downward energy and closed in the upward direction. Why? Because this candle was equally just as big and canceled it out. And so what you're seeing is a tiny movement that only really made a wick's difference. Like, it really only made a difference in the wick of this candle. All right. However, if you look at this rejection that we're really referring to here, this is 599, 612. That's $13. That's $13 in a day versus $2 or $3 in a day. The magnitude is way different. So you want to make sure that you're having patience, especially in like some situations you can really get away with experimenting with that trade, but some of them you just can't. You can't risk some key level flipping you out. Now here, you actually could have said, okay, I'm gonna trade this gap. Oop. You could have said, I'm gonna trade this gap. And if you would have been out, right, because it didn't fill the gap at all, then you would have just been out the exact opposite of what you entered. So you would have exited net zero, which is perfect. But something like this is really hard to recover. And that's why I talk about account recovery as a whole chapter in the book. Because if something like that happens to you, your account is either blown or it's not blown and you have to grow it back. And so everybody goes through a phase where they have to learn account recovery, the skill of account recovery. And learning it makes you never want to blow your account. That's for sure. Either way, if this video helped you to make the market clearer, definitely check out other videos on my channel. This is Watch and Learn 2. So watch episode 1 is already on my channel. It was posted last Tuesday, which was November 11th, if I'm not mistaken. Yes, which is, a week ago. And so comment down below if this was helpful, what you also are, whatever you're confused by. I'll make another video. These are coming. Multiple more of these videos are coming. I got a request for more watch and learns by a commenter. I'm so sorry, I don't remember your name, but I appreciate the comment, and I'm going to make more of these videos. So let me know what you like, didn't like, what was helpful, what wasn't helpful, if you like the length of the video, so that I can actually help and just, provide good content instead of just, putting out videos. So see you guys in my next video, and you are going to be an amazing trader all 2026 because you can absolutely do it.